Hi, it's Joe Mazumdar, editor analyst of Exploration Insights at the Metals Investment Forum, the pre-PDAC version in Toronto. And with me right now is a managing director of Blackstone Minerals, ASX listed company doing nickel in Vietnam, Scott Williamson. Scott, how's it going? So this is not an easy company to understand in terms of typical retail because it's not an exploration story. It's a development story that's got a lot of, let's say, balls in the air. And you are trying to establish a nickel project called Ta Khoa that was run before, but now you want to do it bigger and take that copper concentrate as opposed to exporting it and getting tariffed, which was what happened to the last project. You want to actually go downstream and generate more value from your ultimate product and get an actual premium to the nickel price, the refined nickel price, as opposed to selling a product like a concentrate, which is a discount to the nickel price. And how you do that is I've had subscribers tell me, is convoluted, but it requires a bit of a segmentation between mining, producing a concentrate, and taking that concentrate and producing a product which we will call an NMC 811 precursor. Complicated, but what that is a product that goes into the manufacturing of cathodes, where you add the lithium and the manganese to eventually become something that goes into the battery. Is that correct, Scott?
That's it. That's great. Everything right there done.
Okay, and so thank you very much. Now, but each segment is a bit complicated. So maybe you could take us through where the value add and what is the point of doing this integrated plan.
Yeah. So if we look back on why we're doing it, it's because very early in our sort of movement towards this particular strategy was we built a strong relationship with the lithium-ion battery industry, particularly out of South Korea. We started our lives as cobalt explorers, and it was the Koreans that said to us,
and that was the project in British
Columbia.
In
British Columbia, and that's why we've got a bit of a presence here in Canada. It's because we started as cobalt explorers. The Koreans said to us, can you go and look for nickel? We're changing the chemistry. We're reducing cobalt and we're increasing nickel. And so it was that partnership with the South Korean end users that pushed us in this direction. And they said to us, go and look for nickel sulfide, find something with large scale, long tenure so that we can secure supply for our lithium-ion battery industry. And so we went into Vietnam and we saw this large scale opportunity where the previous owners looked at it much smaller. They depleted one ore body, left a lot of ore behind. And then we saw this opportunity to go downstream because we had hydroelectric power, we've got the low labour costs, but we're on the doorstep of all the major players. So you've got South Korea, Japan, China, where most of the battery industry is located. And then we've also got this local Vietnamese conglomerate called the Vin Group as well. So it all sort of came together, but it was really that lithium-ion battery industry demand for nickel that pushed us to go into these downstream products.
So I've been in this story with the letter for a few years now. We got in at a decent level, about 15 cents, I believe, with a private placement. A while ago, maybe 2019, and that this stock has done well for us. It's gone up to 80 cents. It's since retracted. Fallen back. Still, we're up, but I guess what generated the pullback, and then how do we get this story back on track, or what are you doing to get this back?
Yeah, so I think there's a couple of things that we initially we were aiming to be in production in 2024, and our current estimate is mid 2025. So that sort of sentiment that changed the sentiment a little bit. Then we put out a fairly large capital number, and now we need to show to the market how we're going to fund that, and that's going to be funded through downstream partners, groups like the Vin Group. The Vin Group is a plus $30 billion largest conglomerate in Vietnam, listed on the Vietnam Stock Exchange. So these big downstream partners are going to help us to fund that large capital hurdle. So I believe the fall in the price is because the market doesn't believe that we've got that ability to fund, and they don't understand that these partnerships are about funding, and so what we need to do is now cement these partnerships, make them binding. At the moment, they're non-binding, and it's fairly early stages. We need to make those binding. We need to bring in the capital either at the corporate level or at the asset level, and then once we've shown that this project is funded, then we will begin to re-rate again.
So the segmentation is actually now like a three-part issue with your recent deal with VinFast, is that we have the mine to concentrate, the upstream, we'll call the midstream, taking that concentrate and producing this, what we call the nickel manganese cobalt 811 precursor, NMC 811. And then we're talking about the final downstream component, which is taking that precursor and making cathode. And right now, the VinFast memorandum of understanding is just on that final leg.
Yeah, that's correct. And so this came out during the week, and obviously under, I suppose, not our usual sort of disclosure. But what was missed, I think, from the market is the Vin Group want us to move into the cathode business. So we will be one of the only miners in the industry that will actually be going even further downstream than we first thought. So it's a really exciting advancement. The opportunity to produce cathode in Vietnam with the Vin Group, it's really pushing us even further downstream and unlocking even more value in those downstream products.
So I mean, when I thought about Blackstone originally in terms of an investment, my investment thesis was actually backed by another company, an ASX listed company called Nickel Mines. And when I first met Nickel Mines, I found out that they don't actually mine anything. Most of their free cash flow generator is from one stream in producing stainless steel in Indonesia with a Chinese company. And they don't actually source any of the actual nickel laterite from any of their projects. I mean, maybe 5% of their valuation at that time was part of the mining. And so that downstream was really all their value. And so I thought the same as Blackstone. So I guess right now, given Blackstone's market cap, how do retail investors or any investors see how you have a comparative advantage of getting all these balls in the air organized into something that manages to de-risk that multi-pronged approach?
Yeah, so I think the key to our and it is fair to say that we're becoming more of a chemical business than a mining business, because the chemical downstream part of our business is very scalable, because we can bring third-party feed, we can increase the scale because the demand side is well and truly covered. So that chemical business that we're building is very scalable, and I suppose the competitive advantage is the lowest labor costs in the world, combined with renewable power, combined with the partners that allow us to unlock these chemical products. And that's built on over 3 or 4 years of relationship building, particularly in South Korea. So I think the key here is, and this is what the rest of our industry isn't doing, is building those strong relationships with those downstream chemical partners that allow us to then become a chemical business as well. And that's what's unlocking all that value is in those chemical products. So yeah, it is, unfortunately, it's becoming more of a chemical business. We are all, it is a lot of mining industry technology that is in our flow sheet that's unlocking those chemical products. But yeah, it's really about those relationships and the partnerships that we've built, particularly out of South Korea.
So even though we're emphasizing the downstream in terms of the value add, but we can't forget is that the upstream helps you, maybe not from the revenue basis, but it helps you on the cost basis. And so why is that?
Yeah, and also on the partnership model, because if we didn't have the 500,000 tons of nickel in the ground, we wouldn't have been able to build those relationships with the South Koreans. They need long-term security of supply. And so the nickel was really what unlocked all of this partnership model. it is obviously good for the cost process or the profile of the cost, but it's really about security of supply. So the mine level gives us a good 10 years of mine life at around 20,000 tonnes per annum. So it's about security of supply, cost based as well. Like it's definitely. But what we do is we mine as much marginal nickel as we can to push as much nickel through that upstream mine as we can. So it is obviously a better cost than buying it in the market, but it's really more about security of supply.
Right. And then I guess the other thing, and just for the retail guys, in terms of drilling, you've got a number of rigs drilling some of your higher grade underground targets at the moment. So we'll see more drilling on that stage. But also you're drilling this project that you are trying to auction into a government-owned project called Chimven, that the disseminated target is actually larger. The anomaly that it generates is actually larger than the Ban Phuc one, where that's the majority of your disseminated deposit right now.
Right. Yeah, so it's a magnetic anomaly. The magnetic anomalies throughout the district are indicating ultramafic or magmatic nickel sulfide. So it's 10 to 15 times larger magnetic feature than Ban Phuc. Ban Phuc's around 10 years of mining, 500,000 tonnes of nickel. So yeah, we're putting one hole in it to start with, and then we'll go back to the government and then we'll work through the process of including it into our exploration license area. And yeah, so that hole is about to start any day now, and yeah, really excited to see what that will look like. So we'll know pretty quickly from that first hole.
So Blackstone, I guess, besides this drilling news, the next few catalysts will all be related to corporate development activities in terms of partnerships.
Yeah, partnerships and also feedstock. We need to lock in third-party feed. So we're working with Trafigura and other nickel miners and other trading groups to lock in that third-party feed. So it's really about de-risking the project from a partnership and funding perspective, but also from a third-party feed stock perspective.
Okay, and then you're well capitalized right now to generate the next round of catalysts.
Yeah, 49 million at the last quarter, and that keeps us going till the end of the year, and that will get us very close towards that final investment decision. They may need to top up, but that's where the partners probably come in.
Okay, all right. Well, that's Blackstone Minerals, Managing Director Scott Williamson, and you can find more on their website and also on the presentation that Scott just recently did. So it's Joe Mazumdar, Editor Analyst, Exploration Insights at the pre-PDAC edition of Metals Investment Forum. Thank you for joining us.